Today is Friday, 6th of June 2025, 6 a.m. Eastern Time. This news is brought to you by Preeti Capital, your trusted source for financial insights.
Welcome to the deep dive. We've got a pile of sources here, really focusing in on the financial markets, specifically a Financial Trends and Market Pulse report from early June 2025. So our job today is to dig into this, pull out what really matters, and try to figure out what it all means for you trying to, make sense of this financial landscape. We'll hit the broad trends, look at yesterday's market pulse, some company specifics, and what might be coming up.
Exactly. And these sources, they give us a really interesting snapshot right now. It's not straightforward. You've got some signs pointing towards caution, but then also signs of resilience and quite a bit of action in certain sectors and specific companies. We'll try to synthesize it all for a clearer picture.
Okay, let's get into it then. Starting with that overall market trend. The report calls the S&P 500's performance mixed. What are the numbers telling us? Why mixed?
Well, the source digs into these breadth indicators, basically how many stocks are joining the party, so to speak. The 50-day moving average breadth, that's your short-term view, it's at 68.1%.
68%. So more than two-thirds are above their recent average. That sounds, well, pretty decent short term.
It does, yeah. But then you look at the longer-term picture, the 200-day moving average breadth, and that drops quite a bit. It's down to 44.6%.
Oh, okay, so less than half are above their longer-term trend.
Right. And that contrast is important. It suggests that while things look okay recently, a lot of stocks are still, struggling below that longer-term average. The whole market isn't really lifting together over the long haul.
That makes sense. And I guess you see that in the sector returns too, right? The report shows some pulling back, others pushing forward.
Absolutely. You had sectors like materials, the XLB, down about 1% yesterday. Communication services, XLC, and energy, XLE, also slipped.
But then real estate, XLRE, was up over 1%. And consumer staples, XLP, gained a bit too. Very uneven.
Very. And there's another piece here. The source flags a slight dip in something called the SPY response ratio. It went from 0.301 down to 0.299.
Okay, that sounds like a tiny change, 0.56%. Why does the report highlight that?
Well, it's a momentum indicator. So even a small decrease like that can suggest the market's underlying sort of oof might be weakening a little. The source explicitly mentions this could signal investors to maybe be a bit more cautious.
Right.
So you put it all together, the short-term strength versus longer-term weakness in breadth. The sector's going different ways, this little dip in momentum. It really paints that complex market environment picture they talk about. Definitely not simple.
Yeah, it's like getting mixed signals. Okay, let's zoom in then, from the big picture to just yesterday. The report captures that daily pulse. S&P 500 closed down 0.53%.
That's right, at 5,939.30. And the NASDAQ composite, with all its tech stocks, it fell a bit more, down 0.83%.
And the source mentioned that this was the first drop in a few days for them.
Yeah, first dip for both indices after 4 straight days of gains. So that little winning streak ended.
Were there particular stocks really moving things yesterday?
There were. I mean, you had some smaller moves like VCI Properties up slightly, about 0.25%. Yeah. Halliburton and Trane Technologies were down a little bit.
Okay.
Although, it's worth noting, Trane's actually had a really good run over the past month, up over 6%, even with that tiny dip yesterday.
But the big story, the one that really seemed to yank the NASDAQ down, was Tesla, wasn't it?
Oh, absolutely. The source highlights a huge drop for Tesla shares, down 14.26% yesterday.
Wow, 14%.
Yeah, a massive move. It played a big part in the NASDAQ's overall fall, and the report says it was Tesla's worst trading day since back in March.
That's significant.
Yeah.
What else was swirling around yesterday, adding to the volatility besides, bombshells like Tesla?
Well, the market seemed to be juggling a few things the source mentioned. There were reports about positive trade talks between President Trump and China's Xi Jinping.
Okay.
That sometimes helps calm nerves.
Okay, a positive maybe. But then also waiting on job numbers.
Exactly. There seemed to be some expectation building for a potential slowdown in hiring ahead of the labor market data release. That always adds a layer of uncertainty.
Right.
Plus, you had the 10-year Treasury yield move up a bit to 4.39%.
And the source links that yield increase to something about Fed rate cuts? Seems counterintuitive.
It does, yeah. The source says the yield went up even as the perceived odds of a Fed rate cut actually rose slightly. It's complex, but it reflects the market trying to price in what the Fed might do based on all this incoming economic data.
Okay, interesting twist there. What about commodities yesterday? Did they react?
A little bit. West Texas Intermediate Crude Oil, WTI, closed up about 0.5%. And gold futures saw a modest gain, too.
And the gold move ties back to?
directly to those ongoing worries about global economic growth, according to the source,
Hmm.
especially highlighted by the OECD recently cutting its growth forecasts for both 2025 and 2026. When growth looks shaky, gold often gets that safe haven bid.
Mm-hmm. Yeah, makes sense. So yesterday was really a snapshot of the whole complex picture. You had huge individual stock stories like Tesla overlaid with global trade news, economic data anticipation, bond yields shifting, and commodity prices reflecting those bigger growth concerns.
Precisely. A lot of different threads pulling on the market all at once.
Okay, so let's shift gears slightly. Moving from yesterday's pulse, the source also spotlights some specific companies. Let's circle back to Tesla first. That huge 14% drop on Thursday.
Yeah, confirmed as their worst day since March. But interestingly, the source also points out a small bounce back in after-hours trading, up about 0.8%. Maybe some buyers stepping in after that steep fall.
Could be. And sticking with EVs for a second, Lucid gets a mention. They apparently just locked down a big supply deal for graphite sourced in the US.
That's right, natural graphite, which is really crucial for making batteries down the road. And the source also notes Lucid reported its sixth straight quarter of record deliveries.
So interesting contrast there. One big EV name has a terrible day, another is making strategic moves and showing steady growth. Really highlights the differences even within one sector.
It does. Shows you can't just paint the whole industry with one brush.
Now, a sector that's impossible to ignore, AI. The source talks about NVIDIA, of course.
Yeah, NVIDIA just keeps rolling.
Yeah.
The source mentions their plan to get back into the China AI chip market, navigating those tricky regulations with a new processor, the B40.
Yeah.
And the growth is just, wow. Q1 revenue hit $44.1 billion. That's up 69% year over year.
69%. That's incredible growth for a company that size. Does the source mention who's trying to catch them? Any competition?
It does, yeah. Specifically calls out AMD, Advanced Micro Devices, as a key competitor. And AMD isn't standing still. They're making acquisitions to build up their own AI software side. So yeah, NVIDIA's way out front, but the race is definitely on.
Okay, switching industries completely. Ford Motor Company also gets a mention, closed slightly up yesterday.
Yeah, just under 0.5%. And the source ties that to some pretty strong sales numbers recently, a 16.3% jump in U.S. vehicle sales for May. That's solid.
But there's always a but, isn't there? The source mentions some concerns alongside the good sales news.
Right. Concerns about potential price hikes coming down the line because of tariffs. It's that reminder, again, even if your domestic sales are strong, you're still operating in this global environment where trade policy can throw a wrench in the works.
So these examples, Tesla's wild ride, NVIDIA's explosive growth, Lucid and AMD making strategic plays, Ford's solid sales but facing tariff worries, they really just hammer home that earlier point, don't they? It's a volatile market, and performance is all over the map depending on the company and the specific pressures they're facing.
Exactly. They're like little case studies of the bigger trends we were talking about.
All right, so looking forward now from yesterday and these company stories, the source flags today, June 6th, as a pretty busy day. Several stocks to watch because of earnings or other news.
Yeah, this is where the focus shifts to what's next. The source points out companies that could see some real movement today.
Okay, first up, Coca-Cola Euro-Pacific Partners, CCEP, earnings due out today.
Right. And the source mentions an implied move for the stock of about 3.55%. That's basically what the options market is betting the stock might move up or down after the earnings come out. So anticipation of some volatility there.
And they're doing more than just earnings, a capital markets event in Manila to talk strategy, plus a dividend announcement.
Yep, 0.79 per share dividend announced. Yields around 2.5%, the source says. They also highlight CCEP's environmental record top marks on climate disclosure for 9 years running. And importantly, they're sticking to their profit guidance for the year.
So lots going on with CCEP. Earnings, strategy, dividend, USG. Quite a package.
Definitely one to watch today.
Okay, next up. KT Corporation, ticker KT.
Also expected to report earnings today. The implied move here is a bit higher, 5.24%, so maybe expecting a slightly bigger reaction. They also just filed their big annual report for 2024.
And the source notes where it's trading relative to its high.
Yeah, about 85–86% of its 52-week high. It's had a small gain over the last month, about 2%. But what's interesting is the source flags its VAX rank is #1, which is a strong buy rating from that firm, and its PE ratio is pretty low, 6.33. So the source kind of hints that these things together might suggest KT offers some potential value.
Potential value noted. Okay, and one more with earnings today. Sibanye-Stillwater, SBSW.
Yeah, SBSW is on the list too. And look at the implied move here, 12.15%.
Wow, 12%. That's way higher than the others.
Tells you the market's bracing for a much bigger swing based on their results. They've also been making news with a new partnership, haven't they?
Right, something about nuclear energy.
Yes, a strategic partnership with C5 Capital to look into advanced nuclear opportunities. Shows they're thinking beyond their traditional mining base.
Oh.
And their recent results, which the source touches on, showed a 9% rise in adjusted EBITDA year over year.
Okay, decent EBITDA growth. And the source says what drove that?
Get this, he was driven by a massive 292% increase in profitability from their South African gold operations.
292%. Okay, yeah, I can see why the market might expect a big move if that's the kind of swing they can see in a key segment.
Exactly. It explains that high implied volatility.
The source also quickly rattles off a few others with news or dividends today. ABM Industries reporting earnings.
Expected around 87 cents per share. Manchester United, the football club, talking about a huge new £2 billion stadium plan.
Booking Holdings paying out a dividend, $9.60. PepsiCo and Kimberly-Clark also paying dividends today.
Vodafone gets a mention too for completing a big merger that the source says strengthens their market position. And Northern Trust Corporation is announcing its dividend, 75 cents. The source notes their recent share price gains and some strategic hires too.
So clearly today isn't just background noise. It's packed with these specific company events, earnings, dividends, strategic updates that could really drive individual stocks.
Yeah, it really highlights how, even if the overall market feels uncertain, there are always these specific potential opportunities and risks tied to company news. You really have to dig into the details.
So wrapping this up, it feels like we've painted a picture, based on these sources, of a market that's, well, a bit of a puzzle right now. Short-term stuff looks okay-ish, but longer-term signals, recent momentum, suggesting maybe some caution is warranted.
That sums it up well. The report shows yesterday's dip in the indices was significantly influenced by huge individual moves, like that Tesla drop. But at the same time, you've got incredible growth stories like NVIDIA, and then today, potentially big moves coming from earnings at CCEP, KT, SBSW, and all of this happening with global trade talks, economic data releases, and shifting growth forecasts in the background.
It really shows how much is churning beneath the surface of just the main index numbers, doesn't it? We've tried to pull out those key threads for you from these reports.
And what's really fascinating, I think, is that contrast we keep seeing. The strength in certain pockets versus those broader, more cautious market signals like momentum and breadth, which kind of lead to a bigger question, really.
Yeah.
Well, given all these mixed signals, this huge variation we're seeing between companies, and knowing that more data and earnings are constantly hitting the market, like today,
Yeah.
how might you even begin to think about finding the real opportunities, or maybe spotting the hidden risks, in an environment like this one? Something to maybe mull over as you digest all this information.